Please restrict to one question per person so that everybody gets a chance. And then maybe going forward, we can take another question if time permits. And when you are asking question, please see that you switch on the mic which is in front of you, because that's how, the people listening to this transmission would be able to hear whatever is transpiring here. And once you are done, please switch it off to avoid the interference. Sir, there are 23 participants from media today, and with your permission, I'll call out the names. I'll ask Lata to ask her question.
Thank you, sir. Lata from CNBC-TV18. Governor, thank you very much for the opportunity and for a policy that is giving us a lot of headlines. Okay, I wanted you to clarify things on the liquidity front. In the last few weeks, the repo rate, the call rate was not at the repo rate. You gave enough liquidity and the call rate was 25 basis points below the repo rate. Now that you have given a 50 basis cut, will you use liquidity in such a way to align the call rate more to the repo rate, which means you will do more VRRs, reverse repos, or will the reverse repo have to be suspended because your 40 billion short positions have to be, will mature? So if you can give us a little more color on liquidity, and on the stands itself, is it fair on the part of the market to assume an extended pause, or because the positive real rate, I mean, if you assume that that 1.4 to 1.9 positive real rate is what you are also going by, then with inflation at 3.7, you still have space to cut. So should the market assume that the terminal rate can still go down after the pause?
Yeah, so first of all, thank you, all of you, for coming here as usual and taking our message to everyone across the country. So thank you very much. You have asked 3 questions in 1 question. But we'll try to attempt to answer all of them. So first question is a very good question. In fact, what do we do with liquidity? Where do we actually maintain now the call rate? The call rate today is hovering at the lower end of the LAF as it was till yesterday. So it was at about 5.75%. Whether we now maintain it at 5.25 or at the policy rate, which is at 5.5. That's, as I said, we'll see how the situation goes. Of course, liquidity is abundant, and if we do not do any VRRs, then it's going to stay at 5.25. If we do VRRs, then, we can bring it anywhere between, depending on the amount. So we'll see, how the situation evolves, and we'll take a call. We have not really given it a thought on that, so we will decide, and you will come to know, in the coming few days. I'll not be able to give you a very precise answer, but having the policy at 5.5, and the stance, now going to neutral, so all that will, certainly come in the picture. We will take a call as to where, we will try to have the call rate. The second question is on where do we see the terminal rate. The MPC, I think, has very clearly, articulated that in the statement, in the resolution that has come in. We have changed the stance from accommodative to neutral. And it has mentioned that there is now very limited space for the monetary policy, actually, given the current circumstances. And you are aware of the current circumstances, which is that growth is at about 6.5%. Inflation, we are projecting at 3.7% for this year. And next year, it's above 4, it's 4.5%, or roundabout. So given these current, if these were to play out, there is very limited space, is what, MPC says, and that's why it has been reduced now. We have changed now to neutral. MPC also states that we will continue to monitor the incoming data, and basis that, given especially the uncertainties, what way now we will move will depend primarily on what the data suggests to us. There was a third question which what was your that's it. Thank you. So I've, answered.
That's what I wanted.
Yeah, thanks.
If you can allow me another question, I will.
Yeah, we'll come back later. Come back and see, if there is time.
Thank you, sir. Next, we'll have Mr. Mayur Shetty from Times of India.
Governor, you spoke about the uncertain environment, and a lot of uncertainty is coming from the behavior of the US administration, and that is also resulting in a lot of volatility in dollar assets. So given this, how would you balance between rebuilding the forex reserves and managing exchange rate volatility?
See, our policy over there is very, very clear. It has been very consistent. And we do not manage, try to target any price, any level, any band. You are aware of that. If there is any abnormal, that's a standard response, right? Any abnormal volatility, if it is there, that is what we try to counter, and we let the market prices be determined by the markets. Now, this question, and I think that was something that even Lata alluded to, and that was the third point, I think, that you mentioned.
The 40 billion.
Is, this 40 billion, etc. We are not unduly concerned about that. Even if you were to exclude that $625 billion, if you were to exclude this $65 billion, including, the one after 1 year that is coming in, we are not unduly worried, on that. It's a very, very comfortable level to be in. Yes, if there are opportunities and we can build reserves, that will happen. But that is not something which we will be unduly bothered about. Thank you.
Thank you, sir. अब मैं श्री अनुराग शाह से आग्रह करूंगा कि वो अपना प्रश्न पूछें. अनुराग शाह, ET 9 स्वदेश से.
थैंक यू सर. थैंक यू सर. जो सर ने इतने बड़ा धमाका कर दिया, सबको चौंका दिया. जो मेन प्रश्न लेके आया था सर, वो भी पूछूंगा साइड में. सर ये आज की जो ऐलान से क्या बड़ा मकसद है और क्या संदेश आप देना चाहते हैं ब्रॉडर रूप में?
नहीं, ब्रॉडर रूप में देखो, संदेश हमारा यही है कि इन्फ्लेशन, आपको मालूम है, मुद्रास्फीति इन्फ्लेशन पे अब काफी जो है नियंत्रण में है, और वो जंग जो है हम ये मान सकते हैं कि उसके ऊपर में हमने जीत हासिल कर ली है. तो एक मैसेज है, क्योंकि हमने 4% से उसको घटा करके जो हमारा अनुमान था उसको 3.7% किया है मुद्रास्फीति को. उसी प्रकार से जो ग्रोथ है वो 6.5% है, अच्छी है, लेकिन उसमें और गुंजाइश है, उसके अंदर में और बढ़ोतरी होने का. तो जो भी हमें कार्य करना है, हम ये बिलीव करते हैं कि वो डिसाइसिवली करना चाहिए, सही समय पे करना चाहिए, और एक जो निश्चितता है, इस अनिश्चित वातावरण में निश्चितता मेरे ख्याल से जो है हमें मार्केट्स को, सभी को, बैंक्स को, इकोनॉमी को निश्चितता देने का बहुत अधिक जरूरत थी. इसी वजह से ये जो आपने देखा कि एमपीसी ने कहा कि हमने फ्रंट लोड किया है, ताकि एक ये निश्चितता रहे कि हाँ 50% हमें बेसिस पॉइंट्स कम करना है, तो एक साथ ही उसको कर दिया. उसी प्रकार से जो CRR का है, हम चाहते तो हम इसको 4 महीने बाद भी अनाउंस कर सकते थे, हमने आज ही अनाउंस कर दिया पहले से ही, ताकि लोगों को, बैंक्स को ये निश्चित हो जाए कि लिक्विडिटी, जो कि हमने कहा जरूर है लेकिन वो एक्शंस में भी तब्दील होना चाहिए, तो वो एक्शंस में हमने अपने तब्दील किया कि जो CRR है वो एक हमने उसको आज ही घोषणा कर दी. तो निश्चितता जो है जितनी होगी उतना हमें लगता है कि उससे हमारी जो अर्थव्यवस्था है उसको बल मिलेगा, और यही हमारा संदेश है कि हमारी अर्थव्यवस्था अच्छी चल रही है, और उस अर्थव्यवस्था को दोनों मुद्रास्फीति को ध्यान में रखते हुए, वो हमारा प्रमुख संदेश है, उससे हम बिल्कुल नहीं भटकेंगे. वो हमारा प्रमुख प्राइमरी हमारा जो मोटिव है कि प्राइस स्टेबिलिटी, मुद्रास्फीति को हम कंट्रोल करें, उसके ऊपर में हम अंकुश लगाएं, और जो हमारे को टारगेट दिया है उस टारगेट की ओर हम उसको ले जाएं. जब वो हो जाए तो उसके बाद में हम जो ग्रोथ है, ग्रोथ के ऊपर भी हम ध्यान दें, वही हमने इसमें किया।
सर, जो स्टांस आपने चेंज किया था, पिछली पॉलिसी में ही आप न्यूट्रल से अकोमोडेटिव आए थे और इस बार वापस एक ही पॉलिसी में आप वापस उस स्टांस पे चले गए, तो उससे कहीं एक मैसेज गलत नहीं जाएगा?
गलत मैसेज से मैं नहीं समझा। हाँ, ये बात आप जरूर कह सकते हैं, ये बात हमारे भी दिमाग में थी कि हमने पिछले बारी तो इसको अकोमोडेटिव किया था। हमारे पास में चॉइस ये था कि हम उसको अकोमोडेटिव रखते, जो हमने बोला था, जो मैंने आपको कहा कि बोलते रहे कि अकोमोडेटिव है लेकिन करें नहीं कुछ, तो एक्शन जो है वो ज्यादा इंपॉर्टेंट है और जो भी हम बात कर रहे हैं वो एक्शन में तब्दील होना चाहिए। इसीलिए जो है हमने उन हमारे जो स्टेटमेंट्स रहे इंटेंट के, अकोमोडेटिव केवल एक इंटेंट था, उसको हम अकोमोडेटिव रखते रखते नहीं चेंज करते, अकोमोडेटिव ही रखते, तो क्या वो बेहतर रहता, या हम सर्टेनिटी दें कि हाँ हमने अकोमोडेटिव से जो हमने आपको वादा किया था कि हम इसको रेट को कम करेंगे, डिसाइसिवली कम करेंगे, वो हमने किया और स्टांस को हमने न्यूट्रल कर दिया है। आज के सर्कमस्टांसेस में जो स्थिति बनती है उसके हिसाब से बहुत कम गुंजाइश, जैसा कि एमपीसी ने नोट किया कि उससे बहुत कम गुंजाइश अब रह जाती है, वेरी लिमिटेड स्पेस, उन्होंने कहा वेरी लिमिटेड स्पेस, तो कम गुंजाइश रह जाती है आगे और पॉलिसी रेट्स को कम करने की। ये एक पूरा संदेश हम दें, इसीलिए उसको न्यूट्रल में किया गया है।
धन्यवाद सर। मूविंग टू दिस साइड ऑफ द टेबल, मिस्टर मनोजीत शाह फ्रॉम बिजनेस स्टैंडर्ड।
Good afternoon. Thank you, Punitji. Again on this stance, I mean,
Thank you.
this policy has several surprises. The most surprising part is the stance. As you said in the last policy, the accommodative means the rate can go down or it can stay there. So in that, so neutral would mean the rates can go up. Are you saying rate will not go up, but there will be a long pause? And whether there is a voting on stance, if you can...
It will depend. See, it will depend on data now. This is what neutral means. We had explained it in our earlier MPC. I had explained it in the earlier MPC statement that neutral will mean that it can go either ways. It will depend on how the data comes in. If the growth is weaker, it can mean that it will go down. If the growth is good, inflation is going up, it can mean that, you know, the repo rate policy rate can go up. So it will depend on how the data, both, you know, on inflation as well as growth turns out to be.
Was there voting on stance this time?
Stance, we have already mentioned that there is no, I mean, the statute does not, mandate a voting. There was a discussion on it, certainly, because we need to give a sense, we need to give a guidance. It's more of a guidance that we have to give to the market participants. And so there was a discussion, and everyone, all the 6 MPC members were of the view that we should change it to neutral. So there was no voting, but the view of all the MPC members is that going forward the stance should be changed from accommodative to neutral.
Also, if you can add just one more, are you satisfied with the monetary transmission that has happened so far?
I think it has, going by past trends, the transmission has happened much faster, both on in the money markets. In fact, you can see a huge transmission, more than what we have done, more than 50 basis points in the money markets at the shorter, especially at the shorter term levels. And on the credit side also, we are now seeing some initial signs. Deposit rates, in fact, have been reduced, retail as well as wholesale, by most of the banks. About 40 basis points, they have reduced. The average, of course, is about 27 basis points. It has reduced over there. 17 basis points is the reduction on the credit side, on the outstanding credit. And in terms of fresh loans, there is, that's a little slow, but it has started. It is about 6 basis points as per data that we have. So that's slow, but it is much faster than other times. Normally, it takes 6 to 9 months. It's only been 4 months from the first policy cut. So from first policy cut or 25 basis points. Against that, if 27 basis points on deposit side, 17 basis points on the credit outstanding side, and 6 basis points on the fresh loans, I think this is a very good transmission. However, we need to do it faster. And that's why, we have front-loaded some of our actions.
Thank you so much.
Thank you, sir. Next, we'll have Mr. Vishwanath Nair from NDTV Profit.
Good afternoon, Governor. Couple of questions, actually. The first one with respect to your GDP forecast, which has not changed. The estimates have not changed at all. What is the growth boost that you're expecting from this cumulative 100 basis point rate cut that you've afforded? And thereby, would there be a revision for FY26? And the second part is on the stance itself. I'm asking you again, in the past there has been criticism that the stance is more or less becoming meaningless because we kept saying withdrawal of accommodation, but it was a prolonged pause. Is this a way to then bringing it back into relevance?
So your first question is what impact it has on growth. Obviously, it has a positive impact. It will be very difficult to assess as to how this transmission from monetary policy to the credit rates and then to the real economy, how that transmission happens. As you are aware, it takes minimum of, going by history, 6 to 9 months. We would like, of course, to expedite it, but we'll see impact of this only in the later half. So for this year, in terms of numbers, especially when there is so much of an uncertainty, we would not be in any position to give you how it will, to what extent it will impact the GDP numbers. The second question is on, I can't actually speak about the past, what has happened, but our policy will be very, very clear. Whatever we are saying, we mean it, every wee bit of it, and you will continue to experience that.
Thank you, sir. Next is Ms. Swati Bhatt from
also
the right.
to be kept in mind is, whether it is past or present or future, a lot of it is dependent on data. So if the data kind of changes, even if it is, say, accommodative or tightening, it does not necessarily mean, that next policy itself, you are going to tighten it or you are going to reduce the policy rate. It does not mean that. It depends on how the data is actually coming in and how, what that data is showing. So if that data demands that you have to actually stay put, even if it is accommodative, it will, that's how, it will be done.
Thank you, sir. Next will be Swati Bhatt from Reuters.
Thank you, Puneet, sir. Sir, I just wanted to understand, you have front-loaded the rate cuts and the certainty obviously helps. But we've seen that despite the massive surplus liquidity that has been there in the market, there is very limited scope to lend because there is genuine lack of demand from companies and corporates. There's not much capex happening as well. How does this liquidity really translate to boosting growth? What is the advantage of having so much, flush of liquidity in the banking system? Similarly, on the CRR front as well, obviously you planned it in advance and announced it now. But CRR historically has been at the 4% sacrosanct level to some extent. Is there a renewed thinking on the CRR front, which is why you've gone ahead and cut it to 3%? Thank you.
Can I just add, nowhere you have told us why you cut the CRR. What was the RBI's thinking?
So let me take the second question first. I think the monetary policy statement that I read out, it did mention that it has two objectives. The first objective is that we need to, continue to provide liquidity, and I'll come to your first question relating to liquidity. And then we also mentioned that it will not only improve liquidity, but it will also help reduce cost of funding for the banks. So that is the other objective. And see, over the years, last 12, 13 years data I've seen, and one can even go back, the CRR has mostly remained at 4%, as you have rightly pointed out. During COVID, we reduced it by 1%. Now these reserves are basically kept for liquidity management. So the experience as of now does not suggest that perhaps, we do not need 4%. 3% can perhaps suffice. Having said that, we do not know what the future holds. So please don't hold me, to this number that, we are going to maintain this 3%. But as of now, it seems that 3% is a comfortable reserve ratio to have. And so from a liquidity management perspective, and so that's why, apart from providing liquidity, it will also reduce their costs and improve their NIMs by about 7 basis points at least. It should help, is our estimate. Why do we provide liquidity? So that, there is a better transmission, there is a faster transmission, and it is primarily, it's basically for that. Thank you.
Thank you, sir.
Take the next question.
Liquidity, but will it actually translate, sorry, that bit is unclear, because so far banks are not lending, so how does that demand come in?
It will depend. We have said, even in the statement that this is not a sufficient condition. Monetary policy is not a sufficient condition. It is a necessary condition. We have provided that. We are confident that it will certainly translate into better credit growth. I am not able to give you a number. Obviously and certainly, with confidence, one can say that it will certainly increase, the flow of credit. And so that's why, this liquidity is important. A reduction in repo rate is important. To what extent and what time frame it will take, that will be difficult to say.
Thank you, sir. Next will be Mr. Ankur Mishra from ET Now.
Thank you, Puneet sir. Good afternoon, Governor. I want to understand from you that you have given a statement in the monetary policy that today's steps should be seen towards propelling to a higher aspirational trajectory. You're talking about growth. You have kept your target intact at 6.5%. Is there a scope of further revision ahead which should be expected with the kind of actions you have taken? And also, I will once again ask on the stance front, but in a cricket analogy, if you can explain, it was a roller coaster kind of a policy. We saw you announced 20, expectation was 25 basis point, you announced 50 basis point cut. Similarly for CRR, the expectation was 50, you announced 100. But on the stance front, you got back to the crease and said, I'll wait and watch. So how should one understand?
Well put. The target, you are saying that the target, the 6.5% is not the target, 6.5% is the forecast that we have made. And the aspiration is certainly much more, between 7 and 8%, is our aspiration. Aspiration is 8%. We would like to grow, as fast as possible. You have said it all, I don't have to say anything more, on, you have put it out very well. As to what, this monetary policy, because everyone here in India, they may not understand our monetary policy, but they will understand the cricket lingo. So you put it out very well for your viewers.
Thank you, sir. अब मैं जी बिजनेस से एकता सूरी को आमंत्रित करूंगा.
Policy has been very well received by the markets. However, I want to ask questions which are a little different from the market how they've received it. So मेरा पहला सवाल होगा, पिछली पॉलिसी में हमने गोल्ड लोन्स के ड्राफ्ट के ऊपर बात की थी. उस पॉलिसी से लेकर अब आज की पॉलिसी में आपने कुछ चेंजेस सोचे हैं? क्योंकि बहुत से लोगों को ऐसा भी लगता है कि अगर सोना हम गिरवी रखने जा रहे हैं तो हो सकता है हमारे पास ओनरशिप का कुछ प्रूफ ना हो, क्योंकि वो हमें अपनी मदर या किसी और से मिला हो, या फिर हॉलमार्क ना हो. तो ऐसे जो ट्वीक्स हैं आप सोच रहे हैं नियमों में बदलाव. और दूसरा ये भी, क्योंकि अब हम देख रहे हैं कि फॉरेन बैंक्स की बहुत दिलचस्पी है भारतीय बैंक्स में, तो आप FIIs को लेकर भी कुछ नियमों में बदलाव सोच रहे हैं? 26% का जो वोटिंग राइट है वो भले ही सरकार के पास है, या फिर फॉरेन बैंक कितना स्टेक ले सकते हैं भारतीय बैंक में?
अच्छा, आपने सवाल किया है जो गोल्ड लोन के बारे में, ये भी काफी चर्चा में रहा है. मुझे लगता है कि ये सभी के लिए एक रुचि का विषय होगा. तो इस पे निश्चित रूप से आपका सवाल जो है बनता है. और मैं आपको बताना चाहूँगा सबसे पहले कि जो गोल्ड लोन के बारे में जो हमने रेगुलेशंस जारी किए थे वो केवल ड्राफ्ट थे, मसौदा थे, वो फाइनल नहीं थे। आपको ये भी बताना चाहूंगा कि हमने अब एक फ्रेमवर्क रेगुलेशन मेकिंग के लिए हमने एक जारी किया है, जो सबको हमने पब्लिक नोटिस के थ्रू हमने सबको बताया है कि कोई भी मेजर, जब भी हम कोई परिपत्र या रेगुलेशन या डायरेक्शन इशू करेंगे तो उससे पहले हम दो चीजें करेंगे। एक चीज हम कंसल्टेशन करेंगे, दूसरा हम उसका क्या इम्पैक्ट है उसका हम स्टडी करेंगे। तो उसी को ध्यान में रखते हुए ये भी हमने मसौदा गोल्ड लोन के बारे में हमने जारी किया। दूसरी चीज बताना चाहूंगा कि ये जो हमने जारी किया है इसमें कोई नयापन नहीं था, इसमें कोई नई चीज नहीं थी, ये केवल कोई नई बात नहीं थी। पुराने जो हमारे परिपत्र थे, पुराने जो रेगुलेशंस थे, उन्हीं को हमने कंसोलिडेट किया था, उनको कंसोलिडेट किया था और उनको रिआइटरेट किया था, क्योंकि ऐसा देखा जा रहा था कि कुछ जो हमारे रेगुलेटेड एंटिटीज हैं उनको वो अक्षरतः पालना नहीं कर रहे थे, क्योंकि उसमें क्लैरिटी नहीं थी और इसके बारे में उनको बताया गया था। इस कारण से इसमें कोई नयापन हालांकि नहीं था, लेकिन फिर भी जब वो बात बिल्कुल ब्लैक एंड व्हाइट में सामने आ गई तो इसलिए उसके ऊपर में हमारे पास में उसके कमेंट्स आए। तो मेरे ख्याल से आज ही हम जो है उसका फाइनल जो रेगुलेशन है, फाइनल डायरेक्शन है, आज नहीं तो एट द मोस्ट मंडे, सोमवार तक हम उसको जारी कर देंगे। आपने जो बात कही ओनरशिप के डॉक्यूमेंट्स के बारे में, वो जो हमने ड्राफ्ट जो इशू किया था उसमें भी ये बिल्कुल क्लियर लिखा हुआ है कि अगर आपके पास में उसके इनवॉइस नहीं है तो आप उसका एक सेल्फ डिक्लेरेशन आप दे सकते हैं। तो उसमें कोई चिंता की बात नहीं थी, उसको और हम उसमें और क्लैरिटी हम प्रोवाइड करेंगे। दूसरा ये एक बात आई कि क्रेडिट अप्रेजल, अब छोटे छोटे लोन के लिए क्रेडिट अप्रेजल नहीं किया जाए, तो वो भी हम इसमें डाल रहे हैं कि छोटे जो लोन्स हैं 2.5 लाख रुपए तक के जो लोन्स हैं उसमें गोल्ड से जो जिसमें कोलेटरल आ जाता है उसमें क्रेडिट अप्रेजल की आवश्यकता नहीं है। तीसरा एक एंड यूज के ऊपर में बात आई थी कि एंड यूज की मॉनिटरिंग करनी है, उसमें भी हमने ये स्पष्ट किया है कि एंड यूज की मॉनिटरिंग तभी आवश्यक होगी जब आप उसका प्रायोरिटी सेक्टर लेंडिंग में उसका लाभ आप लेना चाहते हैं। चौथा और पांचवा जो कि महत्वपूर्ण प्रश्न एलटीवी के संदर्भ में है, वो हमने कहा है कि एलटीवी केवल जो कंजम्पशन लोन्स हैं उसमें ही, कंजम्पशन लोन्स में ही एलटीवी का सिद्धांत लागू रहेगा। बाकी में आप क्रेडिट अप्रेजल करेंगे, उसकी और अन्य इनकम्स हैं और सिक्योरिटीज हैं, उसके हिसाब से अगर एलटीवी रेशियो से ज्यादा भी देते हैं तो वो रीपेमेंट कैपेसिटी के बेसिस के ऊपर में उसका आकलन करके वो दिया जा सकता है। और पांचवा और महत्वपूर्ण जो प्रश्न है एलटीवी से ही संबंधित है, वो 75% हमने उसमें अभी आज के दिन में हमने ड्राफ्ट डाला था, उस 75% को हम छोटे लोन्स के लिए 85% तक करने का हमारा प्रस्ताव है। 85% छोटे लोन्स के लिए, बिलो 2.5 लाख के लोन्स के लिए पर बोरोवर 85%, लेकिन इस 85% में इंटरेस्ट जो है वो भी इंक्लूड करना होगा। तो पहले वो केवल हमारा 75% था और प्रिंसिपल एंड इंटरेस्ट का ही था, जो कि कुछ कंपनियां, पब्लिक सेक्टर बैंक्स जो हैं, अधिकतर सभी पब्लिक सेक्टर बैंक्स 75% पे ही दे रहे थे, इंक्लूडिंग इंटरेस्ट। प्रिंसिपल, इसलिए वो प्रिंसिपल जो है केवल 65, 66, 67% तक ही दे रहे थे। लेकिन कुछ अन्य एनबीएफसी इत्यादि और कुछ छोटे बैंक भी हो सकता है, वो जो है 75% प्रिंसिपल दे रहे थे, तो इंटरेस्ट मिलाकर के बुलेट रिपेमेंट लोन में विशेषकर वो 88% तक भी चला जाता है, क्योंकि अगर 18% का लोन है तो आप रिवर्स कैलकुलेट करोगे तो वो 88% तक चला जाता है। तो छोटे लोन 2.5 लाख रुपए तक के लोन के लिए इंक्लूडिंग इंटरेस्ट 2.5 लाख प्रिंसिपल प्लस इंटरेस्ट, तो तो ये पूरी स्पष्टता जो है हम अपने सर्कुलर में देंगे। हमें उम्मीद है कि इससे जहां पे मिनिमम रिस्क के साथ में इस गोल्ड लोन की श्रेणी को हम अच्छे से रेगुलेट कर सकते हैं। दूसरा आपका प्रश्न है कि क्या हम FIIs वगैरह के लिए हम कुछ लिमिट्स वगैरह, फॉरेन बैंक्स वगैरह के लिए लिमिट्स वगैरह कुछ बढ़ा रहे हैं। तो देखिए ऑलरेडी लिमिट्स तो 74% की लिमिट है, ऑलरेडी 49% की लिमिट है ऑन ऑटोमेटिक अप्रूवल रूट, एंड अनदर 25% तो अप टू 74% गवर्नमेंट अप्रूवल रूट में जा सकते हैं। तो उसमें तो कोई बदलाव की आज के दिन में कोई ऐसी कोई बात नहीं है, उसमें कोई चेंजेस मुझे नहीं मालूम ये प्रश्न कहाँ से आ रहा है कि उसको हम चेंज कर रहे हैं। एक दूसरा उससे जुड़ा हुआ है 15% हम अलाउ करते हैं नॉन रेजिडेंट्स के लिए, लेकिन केस टू केस बेसिस पे 15% से ऊपर भी वो जा सकता है। तो उसमें कोई ऐसा बदलाव अभी शीघ्र अतिशीघ्र कोई भी बदलाव उसमें नहीं हो रहा है। हाँ, हमने ये इस बात जरूर कही है कि हो सकता है उसका आप लोगों ने उसको आपने देखा हो, कहीं पे पढ़ा हो, कि हम ये पूरा जो ओनरशिप स्ट्रक्चर है, जो एलिजिबिलिटी कंडीशंस हैं, जिसके अंदर में FFI नॉन रेजिडेंट्स के लिए आज के दिन में 15% है, उस सबको हमको पूरे को एग्जामिन हम कर रहे हैं। वो इमीडिएटली नहीं होगा, उसमें समय लगेगा। ये जो है बहुत डीपर क्वेश्चंस हैं जिनको क्रिकेट की एनालॉजी में जो है 2020 मैच की तरह से नहीं देखना चाहिए। तो वो हम उसको पूरा सोच समझ करके ही क्या हमारे अर्थव्यवस्था के लिए क्या उचित है उसको ध्यान में रखते हुए, क्योंकि बैंक्स में देखिए एक आम साधारण आदमी ट्रस्ट करता है बैंक्स के ऊपर में, जैसा मैंने एक जगह पे इंटरव्यू में कहा, ही ट्रस्ट्स हिज मनी विद द बैंक्स। तो उस प्रकार का ट्रस्ट वर्दी आदमी, ओनर और मैनेजर बैंक में होना जरूरी है। उसके लिए हम किस प्रकार की एलिजिबिलिटी क्राइटेरिया रखें, किस प्रकार की कंडीशंस रखें, उसके लिए सबसे बात करके और उसको निश्चित रूप से हमारी इकोनॉमी ग्रो कर रही है, अर्थव्यवस्था हमारी बढ़ रही है, तो उसमें हमें और अधिक बैंक्स की आवश्यकता है, और उसको ध्यान में रखते हुए जो भी उसमें यदि कोई बदलाव की आवश्यकता होगी तो उसमें बदलाव किए जाएंगे।
धन्यवाद सर। Now I'll request Ms. Sangeeta Mehta from Economic Times to ask her question.
Most of my monetary policy questions are taken away. So I'm going back to the annual report, which was very insightful. It had a lot of data points also. There's one question on the one thing about the annual report where you have said that in FY 25-26, RBI would be considering differentiated regulatory framework for type 1 NBFCs, which are without public funds and non-customer facing NBFCs.
See, it is our policy to have, to as far as possible customize the rules basis the risk profile. And so it is only, in continuation of that particular policy that we have, that mention has been made in the annual report. I'll request DG in case, he would like to add something more on this.
No, I think review is done as a regular process, and type 1 is one which doesn't face outside to the system. So we are having a look at the regulation. So that is an ongoing process. We are doing that. That's it.
There will be kind of new guidelines coming for this kind of NBFCs on fundraising. I mean.
No, type 1 typically doesn't have outside liability.
Yeah. So is there any new?
It will be depending purely on the internal resource accruals from there.
Yeah. No. Are there new guidelines coming for this type 1 type of NBFCs? That is what I
review and then see what kind of regulations.
It only means a review will be carried out.
Okay.
If at all there is a need, then we will do it.
Okay.
So that's the third part of our regulation making framework that we announced. Let me, I mentioned about two important elements for those, because I answered that in Hindi. I think it is important for everyone to know and understand that we have issued a regulation making framework now. There are three critical elements in it. One, that we will do a public consultation. And when I mean a public consultation, it is not only in letter, let me assure everyone, it's not only in letter, it is also in intent. So, so that, the important stakeholders, their views, we get all important stakeholders. The second thing is that we will also do an impact to the extent possible. It may be qualitative. Every time, it may not be possible to do a quantitative impact analysis. What will be the impact thereof on the banking system, on the regulated entities, on the customers, on, all the stakeholders. That is the second element. And the third element is that we will regularly review our regulations, directions, etc. because it is dynamic. Policies have to, change with the times. And so it is only, in that context that we are going to review some of these policies related to Type 1 NBFCs.
Thank you, sir. Now it will be Mr. Anup from Bloomberg.
Thanks, sir. Sir, Anup here from Bloomberg. Interesting choice of words. Monetary policy is left with very little space to support growth. Does it mean that you would expect fiscal authorities to support rest of the growth and your growth aspirations that India should have? And also, even after all these measures that banks...
I believe in doing my work, right?
Right, sir.
And we have done, that bit. And obviously it is expected that, everyone else will be doing, their bit. So that is not something for me to say, right? It's not appropriate. I believe in doing my job, and that's what, we will continue to do.
Right, sir. Sir, one more question. If, despite everything that you have done for banks, they have ever asked for, banks really do not do the transmission, can you take actions? Or what kind of actions can you take?
See, it is... Ultimately, we have said this in our policy statement also, that monetary policy is a necessary but not a sufficient condition, right? So for monetary policy transmission to happen, there are so many other things, including demand, which has to be there, and so. It will depend on the macroeconomic conditions and the demand and the appetite and the demand for credit. Only then, it is the market forces ultimately. See, we have to leave it to market forces. We cannot start regulating that, no, you give credit or you reduce rates. No, you can't do that. It's the market. We believe that our markets are deep, credit markets. There are so many banks, there are so many NBFCs, there are alternative investment funds, now vying, for credit. There is private credit. And so the market forces will certainly, be able to push prices basis demand for credit.
Thank you, sir. Hamsani from Money Control.
Thank you. Hi, I'm Hamsani from Money Control. My question is with regard to the health of the banking system as such. You mentioned in your speech earlier today that you're convinced, you remain quite confident about the health of the banking system. But there's one of the private sector banks where the auditors have recently qualified certain developments as likely to be fraud. Has that been escalated to RBI? What sort of actions you are planning to take on that? And it's been about 4 months since we saw RBI issue a statement in favor of the bank saying that deposits are healthy. What is your assessment of the picture right now, sir?
Well, normally, see, we do not comment on individual banks. As I said, system as a whole, banking system is very, very robust. And I also mentioned, that these events or episodes, I would call them, these will happen. They should not bother us too much, as long as they are far and few between and limited. I think the bank has taken enough number of steps to put their to improve their accounting and other practices, and on the whole, I think the bank is, doing well, I will request DG, Mr. Swaminathan, if he would like to give more details to the extent.
Sir, thank you. I think you've summed up in terms of what is the current situation as far as this particular entity is concerned. You would recall that in the last MPC presser as well, we had said 2-3 things that all of them have been sort of complied with at this point in time. Number one was our priority to have that accounting done properly, accounting for all the discrepancies duly supported by both internal and external audit, and it must be accounted for in Q4 itself. So that has been accomplished by the bank already. Second, we said that forensic audit and accountability must be held so that people are held accountable, and the examination of fraud has to be completed, and law enforcement should take over from there. So that has been accomplished already. And third, of course, our priority is always to ensure that no customer is put to any loss or any inconvenience. That is something which has been ensured, and there is no systemic impact arising out of these kind of episodes. And fourth, we had also said that each of these crises gives us some lessons, so we sharpen our supervisory tools and we calibrate our supervisory approach basis the lessons that we learned from this. So we are going forward, we will look for these kind of red flags so that we are in a position to anticipate them much in advance. So last, in terms of succession planning, anyway, all of you know that the board and management has been sharing with you the updates. So as Governor said, whatever that was supposed to play out over the last 3 months has been is more or less on track, and I'm sure that it should be, if not immediately, but at least very soon, it should settle down and then be back to normal. And we will keep monitoring this. Not only this, but the system as a whole.
Thank you, sir. If I can be allowed to ask one question. On the deposits front, a large part of transmission would be dependent on what banks decide on.
You are taking away someone else's time. Huh? So hold on. If your question is not taken up by someone else, then we can come back.
Thank you.
Okay.
Thank you, sirs. Next we'll have Gopika from Mint.
Thank you, sir. Good afternoon, Governor. You have lowered your FY26 inflation forecast to 3.7%. What would be your FY27 inflation forecast? Did you mention
6.5%? Sorry, 4.5%.
Right. So you're expecting it to go beyond 4%.
Yes.
And also on CRR, you're expecting it to be staggered from September till November.
Yes.
What if the global situation, I know you are giving a clear indication to the banks, but what if globally the environment changes, inflation shoots up? I mean, if there's some risk, how would you sort of then ensure that the CRR is...
We have enough tools. See, CRR is not the only tool for monetary policy or liquidity. You have the OMOs, you have the swaps, and you have, the VRRs and the VRRs. So if liquidity has to be managed, which we actually do not, today feel that there would be a need to reverse any of those things, we have sufficient tools to do it.
Hamsini's question on the private sector lender, how will RBI ensure accountability from the board? So far we've not seen any action at that level, but don't you think the board is also responsible for what has happened?
See, individual, so you are talking about the IndusInd Bank, etc. I think, see, the MD CEO, has resigned, and it says, for taking, moral responsibilities. So I thought, that should be good enough. Do you expect that all the board members? I mean, what are you hinting at? I think the MD CEO, who's also a member of the board, if he has taken responsibility, that is at the board level itself.
So, sorry for interruption. Just even SEBI has now issued an interim order saying that there is some kind of insider trading which might have happened, and where the notices have been issued. Bank is claiming that fraud has happened to them. So I want to understand, sir, have they reached out to you particularly because they mentioned in the call that they will reach out to regulator or the investigative agencies due to the fraud scenario. So, I mean, this is something which is related to one bank, but it is the system of trust.
There are other criminal acts that have happened, and the law will take its course. Please be assured. And in case RBI has to step in and take any action, then RBI will not be failing in its duty. Let's leave it at that. Huh? Let's leave it at that.
Thank you, sir. Thank you, sir. Thank you. No, please, sorry, because there are others.
Let's not be, there are other people. You've already, asked your question.
Thank you, sir.
And let's not, preempt. Let's not preempt, and let's not be speculative about it.
Right. Thank you so very much, sir. Next, we'll have Mr. Piyush from Hindu Business Line.
Good afternoon, Governor, DGs. Thanks, Puniji. Sir, on unsecured loans, you said personal loans, the stress has come down a little bit, but MFI stress continue to, be present. So, are you looking at taking any other measures to address this? Sir, there have been, couple of a payment bank had applied for a SFB license around more than 18 months ago. Then 2 SFBs have now applied for universal license. Is there any timeline, sir, as to, in all the other things, RBI has a timeline of approval. So, is there any timeline where you will, give the approval? And, sir, just one clarity, this time you did not issue any statement on developmental and regulatory
3 questions you are asking.
This is a clarification, sir. We didn't see this time.
Clarification, what do I clarify if it is not there? But I'll only say this, that we believe in actions. We don't believe only in making statements. There are already, enough work that, we have on our hands. And so, we will first, we will try to, because a lot of drafts, you are aware, a lot of drafts are like gold loans you mentioned, and there are others. Thank God you are not asking me about those. You are not asking me about those, what about those drafts? You are asking me, to give more and more and more. So, we will rather, be trying to therefore consolidate, whatever we have already put in the pipeline, what we have already, we have promised. And so, we don't have to necessarily, speak if there is nothing to be spoken, right? What are your other questions?
Banks
licenses, see, I don't think there is a timeline, but it does not mean that, we don't have an internal timeline. Let me assure you that work is in progress in all those applications that you have mentioned, and very soon you will find our decisions. We have already articulated a decision on one of them, which we have rejected. One of them is already rejected. If you are not aware, then, let me mention, it's already there. And the others also we will quickly.
Sorry, sir, what was which application was rejected?
It's not.
It will be coming out.
It will be coming out
as a press release.
As a press release, it will be coming out. You will know.
Today it will come out?
Can't promise, but we will try.
We will do it shortly.
MFI, sir, will you take any more measures? Thank you.
There are no specific regulatory measures planned for MFIs. There are none. There is something else, related to MFIs, but that is not, for this particular purpose. On the supervisory side, if you would like to add anything, on the MFI, because they have been actually recalibrating their business. We have been engaging with them, through supervision. And so, if you would like to add, on the MFI portfolio, that will, I think.
Yeah, thank you, sir. But I think that has been already articulated in the MPC statement in itself, that the entities that are predominantly in this particular segment have already identified, recalibrated their business models, stepping up upon their collection methodologies. And you have also seen a shrinkage of that portfolio on account of that because of their recalibration. So maybe over a period of time, maybe over the next couple of quarters, this should stabilize. Like the other 2 segments also, we saw outlier growth, we took some steps and then it moderated. So this also should going forward, but it also depend on the overall economic conditions, income level, because MFI book is to the most vulnerable segment. So that's something which you will have to bear in mind, give it a little more time for normalizing. But we'll keep watching those numbers. But as Governor said, on none of these segments there are any regulatory actions or measures that is warranted at this point in time.
Thank you, sir. Sir, with your permission, last 3 questions.
Yes.
Thank you, sir. Next, I'll have Mr. Ashish Agashe from PTI.
Thank you so much, sir. Sir, this is a follow-up to Piyush's question on the unsecured lending bit. So, given that, okay, there's an explicit intent to push credit growth, so should we expect some bit of going back on the risk weights order as well of November 23? And so secondly...
Whatever had to be done has been done on that account. Whatever was there, see, prior to COVID, whatever were the risk weights, some relaxations were given during COVID, which were withdrawn, and that's all. If there is any tightening which has happened, that has also been withdrawn. So there is no more, thing on the risk weights.
And so following the Supreme Court pronouncement on the crypto matter, has there been some conversation regarding, like the RBI stance has been clear from the past itself, but given that...
There is no new development insofar as crypto is concerned. There is a committee in the government, which is looking after this. Of course, you are aware we are concerned about crypto in case, because that can hamper, financial stability and monetary policy, etc.
Thanks.
Thank you, sir. Doordarshan se Shyama, you may please ask your question.
Namaskar, sir. So your docu-series are out and they are good. I want to know that generally RBI is known as conservative. So this idea of telling your own story, how did it come from?
I think I'll have to ask, those people, who were involved in, so maybe DG Ravi Shankar, you can
tell public. And in that context, we thought of, this docu-series. The idea of this docu-series is to show what RBI does in a language and visually that an average person understands. Thank you.
So only one episode is out yet. So how many total episodes are there? And
there are 5 episodes. They'll come one after the other.
Okay.
Thank you, sirs. Lastly, we'll have Mr. Hitesh from Indian Express.
Good afternoon, sir. Sir, in your annual report, you mentioned that one of the agenda for you would be studying monetary policy transmission. As part of it, you will be revisiting optimal level of system liquidity. So what is that? Liquidity level which you are looking so that transmission is effective?
So the study will look into those aspects. That's why it's there. If I knew the answer, then it would not be there in the report. The study will, go into those details as to how the liquidity should be maintained, so as to be able to transfer or translate monetary policy into the money markets and then to the credit markets.
Thank you, sir.
Mr. Governor, my question's not been asked. Therefore, if I can be allowed to ask my question.
How many are left?
I haven't had an opportunity.
Only
so just one question.
Okay.
So there are 3 actually.
3. Okay, we take last 3.
Okay, Hamsini, you can.
Thank you. With respect to transmission, much of transmission will depend on how banks look at their deposit rates. And where we are today, we've not seen much of a correction on the deposits front. Banks continue to keep deposit rates higher, and because the fight for deposits is still clearly there in the system. So how do you expect this particular aspect to pan out, sir? And what sort of transmission do you expect to happen on the deposit side? How soon you expect that to happen for the lending rates also to recalibrate?
I think this question was already asked and I already answered it also. But I'll still repeat it. See, 27 against 25 basis points cut that we did in February. There is a lag, you are aware. It will not happen overnight. On the asset side, about 45% of our loan book is linked to external benchmarks, which gets immediately transferred. But on the deposit side, there is no such mechanism. Despite that, and so there is a lag. So we need to understand, as I already mentioned, that there is a lag. Despite that, 27 basis points, it has already, transferred on the deposit side against 25 basis points. Ultimately, you see, the other thing I mentioned is certainly, this will have an impact. It will be with a lag. It will happen. This is what we have seen over the past 2 cycles of both, tightening and easing. That it happens. It happens with a lag of 6 to 9 months, and it will happen, even this time around.
Thank you.
Thank you, sir. I'll request Mr. Laltendu Mishra from the Hindu. Sir, you want to...
If I may, sir, since you had asked earlier to...
There are 2 more questions.
Oh, I'm so sorry.
Mr. Laltendu, you may please ask your question.
Good afternoon, sir. Sir, we fought a war with Pakistan last month. There is a ceasefire right now. Was there an impact on the economy during this period or after that? Because now both sides have also hardened stance. We are going around the world telling our point of views. And secondly, about COVID, there is some rise in COVID cases. Is there a matter of concern there, sir? Thank you.
COVID is not a matter of concern as of now. I think it has become one of the viruses. Hopefully, it should stay like that. The conflict that we had was, or a skirmish or whatever, you may call it, that had a very, very limited, negligible impact on economic activity. Yes, it did have some impact for those days, especially, in northern India, airports being closed, passenger traffic, did certainly, decrease. But there was no major supply chain disruption, etc. So it does not have any impact, on economic activity, growth, inflation. A few days, the prices in those regions, those sectors had gone up, but it's all normalized. It does not have any major impact on the economy.
Thank you, sir. And lastly, Mr. Aryan from The Informist.
Thank you, sir. This is Aryan from Informist. This question actually is for the Governor as well as for DG Shankar and Gupta. The steeper yield curve has shown to deter rate cut transmission to corporates in the past.
What has deterred?
A steeper yield curve, sir. Now, today's the MPC actions today and the RBI's actions today have steepened this yield curve further. So, are there any steps to curb this? And then secondly, in terms of the liquidity management framework, there have been some discussions in the market. Any timeline on a draft for that coming up, sir? Thank you.
See, liquidity management framework, there is no timeline that we have, but of course we would like to do it as early as possible. These are intricate matters which need to be understood in detail, because actually in our country the money market is not kind of unified. There are 3 different markets. The participants are different, collateral and non-collateral. So from a transmission perspective, therefore, we need to understand these issues deeper. We have been examining this issue, and I cannot give you a time frame really on this. First, on the yield curves, I'll request, and you can also supplement, on the liquidity management framework.
Yeah, as you know, government securities yields are affected by a lot of factors. One of those factors is monetary policy and expectations of monetary policy, and liquidity is another factor. But there are also, it depends on demand in particular sectors and so on. Typically, what you would see is that in response to monetary policy, the short end adjusts quicker than the long end. Therefore, when rates are being cut, the curve tends to steepen. When rates are being raised, the curve tends to flatten. That happens. But the market, over a period of time, these get adjusted. So like we said, we don't target any particular rates in Forex. Similarly, in government securities yields also, there are no rates. Market will find its own level. If market feels it is too steep, compared to what it should be, they would adjust that. So we would leave it to the market for such adjustments. On the liquidity, I think, what the Governor said, we are looking at that. Once internal examination is over, we will come out with that framework. Thank you.
Thank you so much.
Thank you, sir. With this, we come to the close of this press conference. I'll thank the top management of Reserve Bank for answering all the questions and making it.
All right, so that was the top brass at the Reserve Bank of India addressing the media, and what a policy it's been. To quickly recap for our viewers, a surprise outsized 50 basis point rate cut accompanied by a 100 basis point cut in the cash reserve ratio, and we also of course had the change in stance to neutral, surprising the street completely. Apart from what has been done in the policy, let me also quickly highlight a few things that came out of the press conference. Importantly, the comments on the reports around foreign bank ownership, in private banks, foreign ownership in private banks, where the RBI governor made it very clear there's no rethink on the 74% FDI in banking overall. There is no rethink on the non-resident 15% cap in private bank ownership, and there are exceptional cases which are considered on a case-to-case basis that the RBI will continue to do. Overall, it is reviewing the framework as part of its regular discourse, and that will take a long time before some decision is reached. Secondly, on gold loans, good news for gold loan financiers, because the 75 LTV limit will be actually increased to 85% when it comes to the small ticket loans of up to 2.5 lakh rupees. So that is a positive to watch out for. And lastly, on IndusInd Bank, the Deputy Governor making it very clear that the matter will settle, and I quote him, very soon, indicating the action that had to be taken by the RBI has been taken. And also responding to a question on the board accountability, saying the MD CEO resigning itself is accountability at the board level and no more action is expected on that front. So those are the three key headlines coming out of the conference, apart of course from the policy. But for now, we're joined by a set of experts to further, go through some of these comments that have come in. Neeraj Gambhir of Axis Bank, Pranjal Bhandari of HSBC, Madhvi Arora of MK Global Financial Services, Rajiv Radhakrishnan of SBI Mutual Fund, and the man of the moment, Soumya Kanti Ghosh of State Bank of India, Chief Economist, the only man on the street to have, predicted a 50 basis point rate cut from the RBI. Mr. Ghosh, let me begin by congratulating you on getting that right, and also on your appointment at, to the Prime Minister's Economic Advisory Council. But on your first take, the 50 basis point cut accompanied by the 100 basis point cut in the cash reserve ratio, what will that do for the economy?
Thank you, Ritu, for the comments. I think, Ritu, there are 2 points in the policy. It's very clear and unambiguous. There has been an unanticipated surprise, of course, in terms of the rate action. But on the rate action, I think it has been front-loaded clearly to aid an investment revival and to lower the cost of borrowings. The second point on the CRR cut, what is most important is that I think the CRR cut has been front-loaded in statement. And it is being cut in September, October, November, December. I think the important point during the CRR cut, where a market actually is thinking about why there has been a CRR cut when the liquidity has been abundant. I think one of the primary reasons of CRR cut could be that it's having a significant impact on the money multiplier. And in an inflation targeting regime, the money supply growth is always endogenous. So if the base money growth is on the smaller side, a higher multiplier actually translates into a larger monetary base. So I think that is one of the thinking which has possibly gone into a CRR cut. And also the second factor is that the CRR cut will have an impact on the MCLR going forward, not now. And that will be actually in the busy season. So overall, while the front-loaded rate cut would now actually cajole the investors in terms of taking up activities which they were thinking of not doing it because of the uncertainty. The action on the liquidity front and the CRR will actually make it happen in the second half when there is the busy season credit policy. So I think this is the overall line of thinking in the RBI, if I am correct, Anna.
Well, we take your point there. Neeraj Gambhir, the fact that the stance has been changed to neutral, how is the street reading this? How extended could the pause really be? And is that a bit of a dampener for the bond markets, even with the large rate cut and the CRR cut that we've got?
So the pause can be really extended. Very hard to put a number on it. We'll have to see how the data comes out, particularly on the growth side over the next 2 or 3 quarters. But I think at least 2 to 3 quarters will be on pause, given what Reserve Bank has done now. Market was actually expecting 225 basis point rate cuts between June and August. That has been delivered now, with the possibility of any further rate cuts in the near term over the next 6 months looking very low. Obviously, the longer end of the bond curve has not taken very positively to it. We are seeing yields go up. Initially, they came down, then they have gone up by roughly 4-5 basis points. But I think that's just a immediate reaction. On the contrary, we are also seeing a fairly significant reprice or yields moving down in the shorter end of the curve, both in government bonds as well as in CPs, CDs, and corporate bonds. Corporate bond yields are actually down by roughly anywhere between 10, 15 to 20 basis points across the curve. So I think the benefit is largely being seen currently in the shorter end of the curve, and the curve has steepened. And the benefit is being seen in the corporate spreads, which had widened initially, but now seem to be tightening a little bit.
All right. And Pranjal, your key takeaways and what is now your expectations in terms of this pause and what the terminal repo rate could be?
Yeah. Thank you. A couple of points. One is, I think this was a very clear case of front loading, as Soumyakanti Ghosh pointed out, steps that the RBI wanted to do, but didn't want to stagger it over a few months, rather wanted to do it all at once early on. So it's front loading. Number two, it wanted to give a package. I think, it wants to give liquidity. It wants to lower the cost of funding, but in a way that NIMs are supported. And I think that's where even the CRR made an entry. The third point I would make is that I think we have to now think about what role the RBI wants to play in the state of the economy. And I think there's been a big change here. It's not just about cyclical growth, about trying to tackle growth today or inflation today, but I think they want to affect the medium-term growth of the economy, the potential, the structural growth of the economy. And I think things like cutting the CRR by 100 basis points at a time when it's not a crisis-like situation just basically, talks about that to me, that they want credit growth to rise in a way that over time, for multiple years, credit GDP growth in India is actually raised. In terms of where we go from here, look, my sense is a lot has been done so far. We were thinking terminal rates will be 5.25, but we were not expecting the CRR cut. So now that the CRR cut has come as well, our sense is that, maybe this is good where they are for now. I don't think there's much space to cut rates at this point of time. And I think it's fairly responsible of the governor to reiterate in the presser that, it's a neutral stance. Extra space for more monetary easing at this point of time is limited. Inflation in FY27 will be close to 4.5%. So maybe, giving the signal very loud and clear that at least in this calendar year, there'll be no more rate cuts or liquidity easing.
Yeah, in fact, the Reserve Bank of India governor put it in so many words when he said the MPC finds no space right now to act in the current environment, and hence the change in stance to neutral. But Madhvi, what is your sense on this pause and the terminal rates? And like Pranjal pointed out, perhaps the focus is very much centered on growth now. I think the governor at some point even said 6.5% is good, but the aspiration is 8%. And therefore this, cut in CRR at the time when liquidity is in surplus.
Hi, Ritu. So I think the front loading of rate cuts, I think is a very smart move by the policymakers when they're very certain as to where the macro dynamics are headed, at least in the near term. We may see inflation even going below 3% in the coming months or so. So they're front loaded at a time when there's a global calm. They wouldn't want to really take action at a time when maybe there could be a global chaos, probably 3 or 4 months down the line, where there could be more noise with regard to trade dynamics not really finding a new equilibrium. So I think the decoupling that emerging markets are enjoying from developed markets has been very well optimized by the Reserve Bank of India, especially when they have a clarity with regard to where the macro dynamics are headed, which are still growth supported, supported of a much lower monetary policy rate. Most of us were expecting the policy rates to go below 5.5% in the terminal rate. Our own expectation also was a 5.25. So I think it's a very commendable thing that they have front-loaded at a time when there's supposedly a global calm and supposedly a decoupling on emerging market fronts as far as their policy assessment is concerned and as far as even their risk-free rates are concerned. Now, secondly, coming on the liquidity aspect of it, I think we've been reiterating in our notes and to our clients as well that we were never of the view that there was an excess liquidity fraud that RBI is infusing in the economy. Insofar, they've done more than 9 lakh crore of primary infusion. Our own math suggests that even if they had to reach a 1.5 or even a 1% of NDTL soft liquidity target that they have, sort of indicated in their pressers last time, they still would have to infuse at least 2.5 to 3 lakh crore of new liquidity from the RBI's own book, of which, I think a large part would now come from CRR. We were expecting more OMOs more towards second half of the year. Now that is sort of taken away. But, if you look at the past transmission cycles as well, be it the Rajan era or Patel era or even pre-2019 rate cuts that we saw, all of them actually saw liquidity surplus being towards a 2% of NDTL or more by the end of the cycle. So there was, I think this time around the surplus is still much lesser than the past cycle. They have obviously front-loaded that, but one has to see that, if you look at the still tepid growth in base money, which again is emanating from the fact that RBI's own balance sheet actually over the last 3 years has barely grown by less than 6-7%, also implies that they had a lot of role to do in terms of expanding their own balance sheet by doing more primary infusion in the form of OMOs, CRR cuts or FX swaps or whatever that takes to basically increase their own balance sheet to ensure that there is a percolation down the base money route. And this was Soumya sir was also mentioning that the role of central bank in infusing primary liquidity was not yet over, and we were expecting them to do more on the infusion bit apart from cutting rates. It was more towards through the end of the year, but I'm very happy that they've actually been much more front-loaded in terms of, using current global calm as an opportunity to actually deliver.
Well, yes, that, 2.5 lakh crore liquidity bazooka from the CRR cut and coupled with the dividend, I think the target of 1% of NDTL surplus liquidity will be more than adequately met. But Rajiv, on the bond market side, we went into this policy expecting a 25 basis point rate cut and accommodative stance. It's turned out quite the opposite. Where do you see the 10-year settling?
Yeah, I think it's an interesting question. In fact, from bond markets perspective, you got a policy repo cut which was higher than what the market had priced in, and you had a 100 basis CRR cut as well, which was unanticipated. But I think the big change has been, or the dampener, if I may were to use that word today, it has been on the stance change, wherein they have gone back to neutral. And effectively, even with the FY26 CPI projection being brought down by 30 basis points, the market possibly could have been looking at the terminal rate being even lower than 5.5. I think that's possibly the dampener from a market perspective, and which is what is getting reflected, at this point on the long end of the curve. But in terms of where you expect the 10-year to eventually settle, I think what needs to, even with a 50 basis rate action, and given that the liquidity surplus is likely to sustain and will be aided by the additional, the CRR reductions that will percolate down to the system. So the effective funding rate will be much lower than 5.5. So you're looking at the effective rate around 5.25 for the foreseeable future. So in that situation, given that we don't really expect any immediate reversal of the policy trajectory, you could possibly see the 10-year benchmark trading lower over the next few months. Possibly closer to 6 is clearly possible in this cycle, given that we really see that surplus liquidity environment to sustain, which basically would be reflected in the effective overnight rates, which will stay much lower than the policy rate.
Okay, well, I'm back from the press conference, so if I can squeeze in a couple of questions. Neeraj, do you agree with Rajiv's interpretation? I directly asked the governor, do you want to keep the call rate at the repo rate? He said, we have not made up our mind. So I don't know what you took away from that. Do you expect the call rate to remain at 5.25? And again, the same question that Ritu asked Rajiv. Is there still a bond rally left, or is it over?
So there are two parts to this. One is the intent and second is the mechanics. Let me first answer the mechanics. As long as the system is in surplus and Reserve Bank is not taking out that surplus through, VRRs at the policy rate, you will see call market rates and overnight rates settle towards the STF rate, because that's the only place where banks can park the liquidity. So for Reserve Bank to bring the overnight rate from 5.25 to 5.5, they will have to actively intervene through the VRRs in the system at the policy rate or near the policy rate. So I think that's the decision that they need to take. My guess is that they might not take the decision early on as yet. They might allow this situation to persist so that there is faster transmission. That's what they seem to be wanting. And if the overnight rates stay close to 5 quarter, then the transmission obviously will be far faster. So I think once they get a sense that transmission is done and the liquidity in the system is doing the job that it is supposed to do, maybe they can steadily bring it back towards the repo rate. But that remains to be seen. So I think it'll evolve over the next, I would say, month to 2 months.
Okay. Well, I got a sense that we have to wait and see. There may be a possibility they will do the repo auctions. He didn't quite say no or yes to it. But again, bond rally, you think it is over? We are at the possibly the lowest point of the yields because it looks like an extended pause. In fact, do you expect another cut at all?
So firstly, I don't expect another cut as yet. I think for the foreseeable future, we'll have to see how the growth pans out. Second, is the bond market rally over? I don't think so. The size of liquidity infusion that is being done, the intent and the front loading of the rate cuts, I think provides a lot of space for the bond market rally to continue. It may not be seen in the 10-year benchmark because all of us tend to focus a lot more on 10-year benchmark. But I think you will see, as I mentioned earlier, that there is steepening of the yield curve that has happened, which means that the front end of the curve has performed a lot better. We are already seeing CP/CD yields come down quite dramatically, and they could potentially come down some bit more. And the corporate bond spreads can actually tighten up from here as well because they had widened as the government bond yields were actually coming down. So I don't think that if you're seen as a whole, the bond market sort of play is yet done. I think it'll happen over the next 3 or 4 months.
Oh, okay. I wanted to ask Sakshi and Madhavi. Sakshi, first you and then Madhavi. Have you all changed any forecast in terms of where you see the terminal repo rate now and growth forecast for the year? Sakshi? Sorry, Madhavi. Sorry.
Is it for Pranjal or for me? Okay, so as of now...
I'm sorry, I meant Madhavi and then Pranjal. Yeah.
Lata, as of now, I think given the fact that they have front-loaded their rate cut and they've given a sense that they would wait and watch, near-term the data is going to be supportive for, a comfortable policy. I don't think near-term we are looking at any policy action from the RBI. I think it will also be a function of how the global dynamics play out because that will be, again, a very important factor in their own reaction function as we go ahead. Near-term, I think we will also wait and watch. Our terminal rate otherwise was at 5.25. I think as of now, I'll still wait and watch because I think they have delivered a lot in the immediate run. And I also believe they would want to wait and watch and see how the transmission really plays out for them. Anyway, the big liquidity bump up is going to come from the Reserve Bank only from September. But before that also, because of the RBI dividend, we'll have ample liquidity in the system. So through the year, we are very comfortable on liquidity, maybe some drying of liquidity towards the end of the year. But generally, we will end the year at around 1.2, 1.3% of NDTL, which is more than the RBI soft target as of now. So I think near term, we'll wait and watch and see. But as of now, I don't think that there will be any rate cut, at least in the next 6 months or so. And plus, a lot will happen globally. I think gradually markets are shifting their call on the Fed rate cut as well. We don't know how China's response would be after the 3-month moratorium with the US would end on the trade front. So a lot will also be playing a part. And plus the global bond rout, which is happening at a very rapid pace. So we'll have to see how that eventually transmits to our economy. As of now, I think emerging market, as I was mentioning, are in a very calm state. So I would just wait and watch rather than pushing for a further rate cut immediately.
Okay. No, I want to know actually whether because of the extraordinary loose policy today, CRR cut and more than expected repo cut, Pranjal changing any growth forecasts?
Lata, there have been 3 positive surprises on the growth front lately. We've all spoken about weak growth, but there's been positive surprises. One, the reciprocal tariff, at least temporarily was reduced from 26 to 10%. Second, inflation suddenly started falling like a brick. which I think has improved real purchasing power for mass consumption. And third, that liquidity is a lot more looser than anybody had predicted, for the foreseeable future. I think all of this is very positive for growth. All of us who were worrying that growth could be sub 6%, I think that's now behind us. I think growth could be anywhere between 6 to 6.5%. 6.5% for me is potential growth. So, RBI's forecast at 6.5 seems to be, all right at this point of time. So I'm not really worried about growth right now. I'm not worried about inflation too this year. I think, in fact, inflation will be more like 3%. Much lower than the 3.7% that the RBI has forecasted. But my worry about inflation is just in the way we have benefited this year from a high base, next year we will have to live with a low base. And just with the same monthly momentum next year, actually FY27 inflation can easily become 4.5%. Again, something that the governor spoke about. So if you think about growth not being that bad, and inflation being perhaps closer to 4 over a 2-year horizon and not much lower, I would say I think we are good right now where we are with the repo rate at 5.5%. I think for me, this is neutral. 4% inflation target plus 1.5% real neutral rate adds up to 5.5% repo rate. I think this is neutral, and RBI stance is also neutral. So I feel no real pressure for any changes at this point of time.
Okay. No, actually, I think the governor almost gave it away when he said, yeah, this year it is 3.5 or 3.7, but next year it is going above 4. So that almost seemed like a giveaway that, I cannot take this as the base and then go ahead and cut even more. Or at least that seemed to me. Neeraj, do you see loan growth increasing? At the moment, system loan growth is 9%, but with this gush, do we end the year with a much better loan growth? Your bank in particular, even.
Yeah, I don't think we are changing our forecast of loan growth as yet. I think loan growth is not just about the price at which money is available, but also the kind of other dynamics that are playing out, particularly the uncertainty on the global front, etc. So I think the private capex cycle and the demand from consumer side has many other variables to deal with before we can see a sustained uptick. But I would say that with the current action and the cumulative action that Reserve Bank has taken over the last few months, I think the monetary policy has done pretty much what it could for setting the stage for higher levels of loan growth, including the surprise CRR cut, because effectively what the CRR cut does is it allows the banks to create more money with the same amount of base money infusion by RBI. So I think the ground conditions have been set, but nothing much can be done about the global volatility and the overall economic conditions that are playing out. We will need some bit of settlement of that for people to gain the confidence and start thinking about private capex, etc. And that is going to be the key driver for growth.
Yeah. May I just hurry you? Is it fair to say that for the banking system, margins fall in the first half but rise in the second half because the CRR becomes effective?
Yeah, I mean, not just the CRR, but the transmission of rates into the liability side. I think the asset side will reprice first, and liabilities reprice with the lag. So I think that dynamic will play out.
Okay, all right. I'm being rushed. We have taken a lot of time. Thank you very much, Pranjul, Madhvi, Neeraj and Rajiv for being with us. Over to you, Ritu.
Well, thank you so much, Lata, for joining us there. And thank you for all of our guests. On that note, we're going to have to wrap up this discussion. Big policy, bigger takeaways and the guidance ahead as far as the non-policy measures are concerned. We'll continue to analyze them right here on CNBC-TV18. Don't go anywhere. We're back in a moment. But for now, we'll step into a short break.
Stamps 25,000 after RBI front loads easing to drive growth. Realty, auto and financial lead the charge up, mid-cap index up a little over 1%.
Banking stocks surge after RBI cuts the repo rate by a bigger than expected 50 basis points and doubles up with a 100 basis points CRR cut. Central bank adds there will be no change on the 74% FDI in banking.
Muthoot Finance and Manappuram Finance gain after RBI announces that loan-to-value for small loans has been revised to 85% from 75% for loans below 2.5 lakhs per borrower, including the interest component.
Real estate stocks surge in trade after RBI cuts repo rates by 50 basis points and CRR to 3% in 4 tranches. The liquidity infusion in the market is likely to spur real estate demand. Well, today's day can be actually divided into 2 halves, one before the RBI meeting, outcome, and the second half as well. We've seen a 300-point recovery as far as the Nifty is concerned from the day's lowest point. We managed to briefly surge past the 25,000 mark as well. And a large leg of this rally is being led by the Nifty Bank. We're seeing over 1,000-point recovery out here, as well as, the growth that we're seeing in the realty pack. Realty space has, spurred up in today's trading session. Look at the gains on Godrej Properties, up almost 6%. Prestige, TLF, all of these counters are doing quite well. Most of the sectoral indices are holding in the green, and the mid-cap end of the market is also doing quite well for itself. Today, it's outperforming the benchmark indices, the advanced decline ratio in favor of the advances. But let's move on to our special segment then, Mid-Cap Movers. We now have Hormaz to take us through the mid-caps that are moving around in trade. Good afternoon, Hormaz. It's a screen that is filled with a lot of green.
Oh, good afternoon, Vamakshi. And as you just mentioned, a tale of 2 halves, if you could categorize it at that. And of course, everything today is about the reactions to the RBI monetary policy, but there are some that are non-policy reactions as well. Some of the gainers in the broader markets, we start off with those. First up, Godrej Industries is one of them, 15% higher now on that stock, and it's at the highest point of the day. The top gainer on the Nifty 500 today. Newland Laboratories is one such gainer as well, 11% higher, continuing to move from strength to strength. And Ramkrishna Forgings has surged up today, and 9.5% higher on that stock on very strong volumes as well. Now moving into policy reactions then, and some of the first movers on that policy reactions were the NBFCs and Chola Investment, 5-star, M&M Financial. Take any BFSI name today and you would find that in the green, 5 to 6% higher for these names. The gold financiers have had a boost as well after the potential relaxations in LTV norms. Muthoot is up 7. Manappuram, of course, in the ban, but of course 5% higher here. And IIFL Finance too, seeing healthy gains in today's session, and that has also had an impact on the real estate names. The realty index had already rallied 5% in anticipation of the policy, and it is continuing to build on to those gains. And look at these names: Godrej Properties, DLF, Ajmera, Oberoi, all of them seeing gains of anywhere between 6 to 7% today. And lastly, some of the volume-led movers, and of course most of them not related to policy though. Route Mobile is up 4.5%, GMDC is up 6.5%, Praj Industries after that contract in Paraguay is up 4%, and Nippon Life too. And a lot of these AMC names, even UTI AMC today has seen some healthy gains on very strong volumes. Back to you guys.
Hormaz, I'm sure today was a challenge to find a single stock in the red for you.
I chose not to.
Keeping it optimistic. Thank you so much, Hormaz, for joining us, giving us a sense of all of the stocks that are doing quite well as far as the broader end of the markets are concerned. Well, we now slip into a short break. The managements of Signature Global and Mahindra Lifespace Developers join us next to discuss the impact of the RBI slashing its repo rates by 50 basis points and the impact it will have on the realty space.
How you came back to India in 2015, the height of the Maggie crisis.
My father later on told me, when I called him up, I said, "Dad, should I take up this?" So he said, "Son, nobody puts an idiot into a crisis."
Mr. M. Naik of L&T, in his voice, કંઈ નથી થઈ રહ્યું.
અને કંઈ થાય બી નહીં ઘણા વર્ષ સુધી.
What is the best piece of advice that you've received?
To get control, you must give up control.
What have been the biggest lessons from a marketing point of view that you would like to leave?
Kodak did not fail because it was a lousy brand. We did a small experiment to have Maggie counters in weddings. A Maggie stall attracted far more attention than the other traditional food fare.
In a wedding?
In a wedding.
Indian stocks are not cheap. They don't go down because they don't deserve to go down.
The natural thing for everyone is to say that you're doing great and everything's perfect and yes, we agree with everything you said, and they're dangerous.
How difficult and how different is the Gen Z customer?
They don't come in with a reverence for any brand.
Why do you say so?
Welcome back. You're watching Midcap Radar on CNBC-TV18. Just a few stocks that I'd like to highlight from the capital market theme. Look at MCX. That stock has surged by almost 5% today. It is sitting comfortably at 7,450 thereabouts. Over the past 1 month itself, all these capital market stocks have done quite well. MCX, in fact, has gained around 24% and is sitting at an all-time high. Pull up the chart for HDFC, AMC as well. The stock is seeing an uptick of 5% as well. BSE as well, as we've been highlighting all throughout last week, has been doing exceptionally well. In fact, today as well, the stock has managed to reach an all-time high. But let's focus in on a CNBC TV18 exclusive now. Sources tell CNBC TV18 that Road Ministry is considering hiking motor third-party premium for FY26. My colleague Yash Jain now joins in with details. Tell us more, Yash.
Well, it's been a long wait for general insurance companies. They've been pushing for this motor third-party premium hike for about 3 years now, wanting to see some hike there in terms of motor third-party insurance premium. And seems like things are moving indeed as far as that particular front is concerned. What we've been given to understand is that Ministry of Road Transport and Highways, that is the Road Ministry, is considering a hike in motor third-party insurance premium for FY26. According to our sources, the ministry has received recommendations from IRDAI, which is suggesting that IRDAI is seeking an average of 18% hike when it comes to the motor third-party insurance premium, with one of the classes, vehicle classes under that, seeking an increase of 20 to 25%. It's a large business segment for all general insurance companies, ICICI Lombard, New India, as well as Go Digit. For the industry, 20% of the total premium comes from motor third-party insurance. Under motor insurance, 60% of the premium comes from motor third party. Now, we've just looked at some numbers. A 20% increase in motor third party insurance premium, if it indeed comes through for FY26, could lead to an improvement of about 4 to 5% when it comes to combined ratios of these general insurance companies, that is ICICI Lombard, Go Digit, as well as New India Assurance. So an important development under works, and we'll have to see how this proceeds. We've been given to understand that in the next 2 to 3 weeks is when the ministry could take a final call on increasing the motor third party premium, after which a consultation paper, the usual process, will be rolled out.
Thank you so much, Yash, for highlighting that extremely important story, especially as far as motor third-party insurance premiums are concerned. Good news if you are a shareholder of these companies, but bad news if you are a car owner or a vehicle owner. Well, moving on, it's not short of news flow today.
Absolutely.
Lots going on. Very important discussion lined up. We have Rajat Kathuria, CEO of Signature Global, and Amit Kumar Sinha, MD and CEO of Mahindra Lifespace Developers, who join us now. Thank you so much, gentlemen, for joining us. I'm sure you're rejoicing given the kind of liquidity gush you've received from Main Street. Mr. Amit, you've been a regular on the show. First up, decode this particular move for us. What does this mean for a home buyer?
Well, this is a great news for home buyers. In fact, it's great news for consumers all across. I'm hoping the lower repo rates will be passed on to consumers by all the banks. That's the key assumption, and that has happened before. So what happens is whenever you have lower rates, it stimulates GDP in multiple ways, because people look at EMI coming down, their auto, housing, many of the other consumer durables, the EMI and the outflow comes down significantly, and it stimulates their purchasing, their spending even more. So overall, it's good for the economy. So from a consumer point of view, it's a great news. I heard you talk about the insurance going up. Hopefully, this will counterbalance some of the pain they may have on the insurance side, having a lower EMI. So great news on the consumer side. But on the other side, from a corporate perspective, like as a corporate for us, I think the rates coming down has a huge improvement for us on the balance sheet side. Our debt burden, some of us has a healthy debt to equity ratio, but the liquidity will improve, the interest rates will come down, the interest payout will come down significantly. And that allows us to do more. We can do more capital allocation toward projects that have higher returns. And that same applies to the other industrial clients also. Like I have an industrial business, and many of the clients are looking for expansion. They say when the burden comes down, they'll say, hey, this is an opportunity for us to do more capital allocation, more capex towards growth. So overall, from a consumer point of view, from a corporate point of view, as well as from a industrial investment point of view, this is a great news for all of us.
Well, thank you so much for that, Mr. Sinha. But moving on to then Mr. Kathuria, because you have a very strong presence in the affordable as well as the mid-income segment, and this is one part of the real estate market, especially the lower end of the market, that was not doing so well. Now we've had 3 rate cuts so far this year. How have the earlier 2 rate cuts impacted your demand thus far? And with this rate cut now coming in, how do you see demand panning out going forward?
Yeah, Amakshi, thanks for inviting us to your show. So, I'll start with a very motherhood statement that, real estate is a very capital-hungry sector, and financing cost tends to be very critical either for the developer or for the home buyer. And if you'll see, as a country, we are still at a very nascent stage in terms of supply creation, in the housing space. Top 7 to 8 cities, we are still, after 2 to 3 good years, we're supplying about, let's say, 500,000 new homes as an economy. And if we compare that to, let's say, China, it will be probably doing 10 times more new homes after a fairly long and strong housing cycle. So, there's a lot of work which needs to be done in the space, and all these policy initiatives by the government, whether it is in terms of the earlier rate cuts, tax benefits in the last budget, and this, welcome surprise where it's actually a 50 basis points cut, is a big boost for the customer, which really sees a big impact on their affordability of homes. And I think it very positively impacts all product segments, whether it be affordable, mid-income, and even to that extent, premium housing space. So we are seeing a good, demand scenario in the market. This move should definitely have a positive bearing on it.
Rajat, can you quantify a few numbers for us? A 50 basis point rate cut by the RBI, assuming that transmission is done almost immediately. In terms of EMI burden for the customer, how much does that reduce by? And number 2, Amit did tell us that it improves the balance sheet as far as developers are concerned. So at what rate, would a developer like you, Rajat, actually, borrow from banks? And what will be the kind of positive impact it will have for you?
So as an industry, the balance sheet of multiple developers is much healthier than what it used to be 3 to 4 years ago. So if you look at top 8 or 10 housing companies in the country, if we were doing, I'm giving ballparks here, let's say as an industry, if we were selling about 50,000 crores about 5 years ago, today that number's comfortably jumped to, let's say, 1.5 lakh crores of sales are happening. In addition, there've been a lot of equity infusions into the balance sheets by almost all developers. Net debt or debt levels are significantly lower. So availability of capital is not a challenge. Yes, any reduction in rate definitely reduces the interest burden. But the advantage is more for the consumer because, we fortunately have like a 30-year product available today for the customer. It used to be 25 years, till a few years ago, and maybe it used to be 20 years earlier. So 30 years like a long enough product. A half, 50 basis point cut, does move the needle in terms of the EMI payout.
Well, Mr. Sinha, my next question is for you. You have said that you will be exiting the affordable segment completely over the next 5 years. Given how the rate cuts have panned out, is there probably a rethink or a realignment of strategy for you going forward, or do you largely stick to the same?
So I think it's, first of all, the definition of affordable is very important for us. I think we will go away from the low end of the affordable segment. We'll continue to play the high end of the affordable segment, I think, is what we call mid-premium. We'll continue to play in that segment. And that's a healthy segment as you all have discussed. I think the rate cut will stimulate demand in that segment. So we are excited by it. And I think just to quantify this, 0.5%, 50 basis point will have either people keep the same EMI and reduce the duration, but many people will actually see a EMI come down by 3 to 5%, which is a meaningful reduction in the EMI. So that's very good for this segment. So overall, we will probably continue to exit the low end of the affordable segment that we call it, and then focus on mid-premium, premium, which are slightly better for the market we operate in.
Amit, both a qualitative as well as a quantitative question. First up, in past rate cut cycles, typically, when a rate cut of 50 basis points or a 25 basis points, do come about, what has been the subsequent increase in demand? And typically, you said that, most consumers go in for a lower EMI. Do they also go ahead and upscale in terms of the size of apartments or the area that they go ahead and buy?
Yeah, so let me take that question. I think there is, I wish there was a like-to-like correlation, but many times the rate cuts are not always linked to the launches that we have. But generally, what we have seen in the past is when the timing works perfectly, when there's something like this announcement happens and you have launch immediately happening, it just really create a huge amount of footfall for our projects. And as you know, we are focused on 3 major cities, Mumbai, Pune, Bangalore. In case of we had a previous rate cut, we saw a good amount of boost in the footfall for some of our Mumbai projects. So that was very helpful. My sense is that will continue to be there, and people will be very excited to take benefit from the rate cut that they are seeing. The sentiment changed completely. In terms of the upgrade question that you had, I think you are absolutely right. What we are seeing is it's not the per capita income that drives demand in this market in India. It's the per household income. It's not only you are contributing, your parents are contributing. Sometimes, parents, children are contributing. So multi-generational, decision making happens here, and they pull all the investment together. And so when you see that not only more than one person in the family is able to see the benefit of the rate cut, the upgrade desire actually is really can be fructified. So we do see a significant interest in people who say, oh, we're looking at a 2-bedroom apartment, can we go to a 3-bedroom or something like 2-bedroom large? So we do see an increase in appetite of people to see to explore larger upgrades as we look at it. And for Bombay, that is a huge thing. Go from 800 to 900 to 1,000. That's a big increase, and that helps developers from a ticket size point of view.
So demand is good. There's no complaining about that. This does, boost the sentiment. But Rajat, now coming to you, I just like to understand from you because, when we talk about the real estate cycle as a whole, there are several steps involved, right? You have the land, then you, of course, go ahead with the RERA approvals, and then you go for the launch. So my question is, how long will it take for the affordable inventory to now come in for the industry as a whole, because supply has, not come through as much as expected for at least the lower end of the market?
Actually, we as a company, we started with affordable housing, and we've probably done, in terms of volume, probably the largest number of affordable housing units in the country. In the first 5 years of our initiation, we probably did close to 20,000 units in the affordable category, and this was like absolutely pure affordable, like homes coming in the range of 25 to 30 lakhs. Post 2020, and just to add on, the affordable housing, we used to do it like within the city limits, not going too far away from the city, and hence, calling the project affordable because land prices there tend to be quite low. Over the last 2-3 years, however, there's been a reasonable spike in the land prices in the city limits. At least, in the area we operate, the land prices have gone up, and hence it has made hardcore affordable housing a little unviable for developers. So last couple of years, we've been focusing on mid-income segment. Definitions could vary, but the way Amit was saying that, the upper end of affordable is what they are focusing on. Likewise, we call ourselves more mid-income, but this is a fairly wide spectrum of mid-income, houses starting at about, let's say, 1.5 crores going up to about 4 odd crores. So, that's the spectrum we are playing in. But affordable housing supply is dependent on land cost, and at current land prices, a lot of supply in affordable segment looks tough, at least in the NCR market.
Thank you so much, Amit, as well as Rajat, for joining us, giving us a sense of how exactly the entire real estate space and investors should look at this particular rate cut coming in from the RBI, clearly a positive sign, and the entire real estate pack, actually the entire week, in anticipation of a 25 basis point cut, the stocks have rallied. So 50 basis point cut is actually a cherry on the top, and that is what has caused the rally to extend even further. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Rajesh, good to have you with us here. I don't know if you heard the conversation with the SBI chairman, but what's the thing to do? On the back of this rate cut, what would you buy?
Yeah, I think, the last two interviews were really very informative for your viewers. I think they laid out, Mr. Sethi of SBI just laid out the fact that the growth, which was a challenge, is something that they will address by increasing their loan book. And I think that's great for the stock markets as well. And I think, as Mr. Mistry also said, the slowdown that we were witnessing in the last year is also getting addressed. Look, I think the challenge for the market was the slowdown in earnings, which was really by way of slowdown in GDP, because the government expenditure, which was really the one which was driving growth in India, was ebbing because we had to control our fiscal deficit. The other components of GDP were not firing. Fortunately, we have a very good deflationary environment. I would say inflation is very benign across several parameters, and that has given us tremendous monetary policy leverage to jumpstart growth. And I think the RBI governor has been courageous enough to go a 50 basis point plus a CRR cut to jumpstart growth. And when we talk to banks, they say that they are ready to lend again in the retail category. So this is going to accelerate growth, which is great for earnings and great for the stock markets. Left to our own devices, I would not be surprised if India goes to a new high. As far as your sector call is concerned, of course, look, I think the immediate beneficiaries of the interest rate cut are NBFCs. You have seen this, there's a very strong market. Look at how real estate, capital market plays, engineering companies have bounced back. As an aside, I would say it's probably automobile companies also, which have not participated so far, could also be beneficiaries as you move forward.
So incremental money, when you have to put it to work at this juncture, it would be NBFCs and auto?
So my incremental money has gone into NBFCs. It has gone into auto. It did go into quick commerce companies, and I bought some public sector banks. So that is really where my incremental money has gone. I rue the fact that I have not bought enough real estate or capital marketplace, but I think those are also sectors which can do well as you move forward, given what has happened.
You want to name any names, especially in NBFCs, Rajesh?
You know the challenges that we face, but I have added a gold finance company where a private equity major has taken a stake because it was available at a one-time price to book multiple. So that is something that I've added as far as NBFC is concerned. Of course, we have other NBFCs as well. We continue to like the fast-growing NBFC, which had become extremely expensive, only to become slightly more cheaper over the years as the price consolidated. We think it's catering to the right consumer segment, and it can kind of continue to grow as you move forward. So that's another large holding of NBFC that we have.
Real estate was a missed opportunity in some way. That's what you said. Now, would you look to add to real estate, or it's too late?
So not my money incrementally is not going to real estate. Honestly, like I said, it was a missed opportunity. But when we speak to real estate companies, they are very excited about their pre-sales that they are witnessing. We asked them about whether they are seeing any slowdown given the stock market decline, etc. They were, quite affirmative that they are not seeing any slowdown. So even though they are hearing of an economic slowdown and a stock market slowdown, they are not seeing any pre-sales slowdown. And given this boost that you're going to get from for the economy, I think it's going to be a sector which is going to remain elevated. But for me, my margin of safety is a little low as far as real estate companies are concerned.
Yeah, no, absolutely. The other one is defense sector. By the way, the defense index, we've forgotten about it. It's down. The index is down after a huge amount of outperformance. Do you own anything here, Rajesh?
Yeah.
And the question is it are these viable now at these levels?
So again, I own only the frontline companies. But I can tell you, we were in a defense conference, and the kind of visibility that these companies are talking about, growth rates, etc., they seem to be full for a 5 or 10 year kind of period. They kind of are alluding to the fact that they can actually grow for a very long period of time. But I think you've kind of hit the nail on the head. Are these at valuations which are comfortable? But look, I think that's the challenge for our equity market. There's just too much money chasing these growth stories. I mean, look, I've been to like 5 or 6 conferences in the last month or so. When you talk to electronic manufacturing companies, engineering companies, right, defense companies, the confidence for growth rate for 5 or 10 years is incredibly high. But these stocks are also not cheap. So that's really the challenge that we have. So India is in a very good spot. The risk will be only global. Our macros are very strong, and I think we are again poised to accelerate as we move forward.
No, absolutely. Another sector, Rajesh, like defense, where, you're asking the question, what's going on with the market caps, which have ballooned, right? Is rail, and we're going to focus on that. Nimesh actually is now joining us. Nimesh is going to talk about not rail now, but rail later in about 30 minutes time on Editors Roundtable. Nimesh, but for now, what's the chatter? What are you picking up? What's the mood like?
Well, Prashant, it's all about RBI policy, right? And we've seen a big rally in the financial stocks today. The Bank Nifty is up 1.5%. The top gainers in the FNO are all part of the financial names, whether it's NBFCs or private banks. So actually, it's come as a big surprise. The whole policy was much more than what the street was anticipating, especially in the CRR. Nobody was anticipating such a big cut coming in. So that's been a big talking point in the daily rooms as well. And we've seen a reaction across the financials and rate sensitive. So I spoke about buying interest in the bank names and small private banks and NBFCs. Even the real estate, which was seeing a bit of profit booking yesterday, have again seen a big rally today. So all the real estate stocks are buzzing in trade and on large volumes as well. I guess from a technical point of view, 24,950 is the level on a closing basis to watch out for. If that's the case today, you might see further short covering rally in the days to come. So clearly, the RBI policy was the center stage today and has led to a big rally across the financial names.
What are you picking up in terms of specific stocks, Nimesh?
So the first stock on my list today, Prashant, is Ramkrishna Forging. That stock is buzzing in trade, up 10% for a couple of reasons. One, I understand there was a selling going on from a domestic mutual fund. That seems to be largely over. So supply is gone. And also the fact that the promoters, earlier this week, announced putting in money at 2,100 rupees per share. The question mark there was on the warrant by when they will convert. The sense I'm getting from the investors or some of the buy-side fund managers is that maybe that money will come much before the 18 months of the warrant period. So I guess that's also a bit of the reason why we're seeing a bit of traction in that name today. So that's the first stock. Second stock is Azad Engineering, which we highlighted a large block till in the morning trade, nearly 8% equity got changed hands. Again, I understand the promoter entity was a seller in today's block, and that's the reason why that stock is under pressure, because the entire deal happened at a much discount. The third name is ITC. This is going to be interesting. Well, the stock has been consolidating off late. I understand some couple of large, global FIs have bought also ITC in the last few weeks. But for ITC, the sense I'm taking is there could be a corporate development very soon, and that is potentially an inorganic move by the company in the foods business. So that's the buzz as far as ITC is concerned. And the last one is Elecon Engineering. Again, something I ended up putting out at least one stock where there is a large block coming in, and the next could be in Elecon Engineering. So while the stock has been consolidating, the sense is there could be a large block coming in Elecon very soon.
Swiggy, and there's the other one, right, which has been moving around. So RK Forgings is, of course, is the biggest volume-led gainer, by the way, right now. Azad Engineering, Elecon and ITC are some of the names which Nimesh is highlighting. We'll keep an eye on these stocks. Well, we'll take a break here, but as we do that, let's just sort of revisit that story, which is, of course, the big talking point globally, the fight between President Trump and Elon Musk. The question I asked Leif Eskesen, chief economist at CLSA, is this. Can this fight lead to a toning down of the trade war rhetoric? Can this actually at the margin be a net positive in that regard? Listen and take that break. See you on the other side.
The more voices you have from corporate titans, right, that are pushing back at this sort of more aggressive tariff strategy, right, and are warning about the broader macroeconomic implications, but also the sector implications of these tariffs, right? The more people you have from that side of the spectrum talking out against that, it could, on the margin, as I said, soften the stance of the Trump administration in their negotiations with other parties, right? But I also think the sort of, should we say, the tariff strategy as an ideology runs deep in the Republican Party with Trump and with other advisors as well, right? So I don't think it's going to lead to an U-turn on that front, but maybe a somewhat more, should we say, constructive dialogue in the ongoing negotiations with other trading partners, right? So again, on the margin, it could soften the stance a little bit, maybe move us on the margin a bit more forward on some of these trade negotiations, right? But again, it's not going to stop them. It's not going to reverse them, but it could sort of add a little bit of reality check to the ongoing debates.